every seminar, we do a market report, we pull up some relevant numbers that are sort of, we think that are the important numbers when you're looking at all the stats. And we're looking at Calgary stats right here. And I've highlighted the numbers that I want to talk about today. Total sales. If you look at the total sales, they've dropped 21% in August over August of last year. If you look at July, they were down 10%. So it seems to be on a trend where sales are dropping and dropping and dropping. This is the total sales. This is of all housing types in Calgary. So what we're seeing with, even though we've had a couple of interest rate drops, they haven't dropped enough to stimulate the volume of sales that we want to see. The active listings, you can see on that line there, they're up 27%. Now that's a huge number. We've been waiting and waiting and waiting to see an increase in the active listings. When you look at the actual number, it's 4,500, but with these stats, the pending sales are in there as well. So we're probably 3,500, something like that, maybe a little less.
3,300.
Yeah. So the actual number of active listings is less, but that increase, that percentage increase is what we want to see. We want to see that month over month over month. That will balance the market because we're still in a seller's market, as you can see, when we look at the average price. The average price has gone up almost 18% this August. And if you look back at July, it was 12.3%. We're seeing that increase. So you're seeing the total sales go down, but the active listings going up. And the anomaly here is the average price. Now, if you look at the average price is 614. Compare that to the bigger population centers in Canada, Toronto and Vancouver. Their average prices are over 1.2 million. So we're only half of where they are.
Yeah, so you know what this tells me, Tim? Everybody's on summer vacation because 20% down on sales. It is what it is. We don't look at that. We look at the average price going up. What it's telling us is that, you know what? People are just holding out. They're at a stage right now. They know interest rates are going to drop. Do they want to lock in? We've had some clients have to lock in and take the fixed rate just because the fixed rate is cheaper right now. And they know that that fixed rate will drop again. So they're just kind of holding out to see what happens. But we can definitely tell you, we had one of our investors, Kaladi, send us 5 properties on Friday and then 5 properties yesterday. So that's a total of 10. Okay, out of those 10 properties, I think there's 1 available. And this price range is between 400 and 450,000 for a townhouse down south near Auburn Bay, around those areas. And out of 10 properties he wanted to go view, 1 was available. And what that tells me is that price point is really hopping. So don't be misguided on, you know, that the market's slowing down. It really depends what price point. If you're above $1 million, yes, you have a lot more time and a lot more choice now to decide on what's coming up. So we want to stress that. That is our market update for August. That's how it's going to wrap up, Tim, for August. And it's been pretty strong. Okay, we're going to get to Janet's question just in a quick second here about some tips. We'll give you some 2-minute tips on your flip that you want to do. It'll just be 2 minutes. But we just want to stress that if anybody's thinking of investing in real estate, the first thing you've got to do is work with a pro mortgage broker. When we say a pro mortgage broker, we normally have Danielle on. She is out on vacation right now, like everybody else in Calgary. And you know what? The reason we say Danielle's a pro is because she doesn't just give you a mortgage or get you a mortgage. She gives you a mortgage plan. So if you're working with us, our investors normally buy, Tim, 3 to 5 properties. We work with investors that want to become wealthy, hence why our company is called Calgary Real Estate Wealth. Now, Tim, it really only takes 3 properties to get there.
Yeah, okay? We've also got investors that have many, many, many doors. Our top investor has over 500 doors, but not everybody's going to get there. The average person out there who want to get there, because that's a management deal in itself. Our average investor out there, like as I said, has 3 to 5. And to get there, you still need to arrange your mortgages in the proper way. You can't have lenders rejecting you because you have the wrong mortgage on a certain property or because you've maxed out on your qualifying ability. So working with a good mortgage broker like Danielle, who's part of our team, will ensure that you can get there with very, very little stress. She sets out a real estate investment plan for you on paper. You know, she can plot out, if your goal is 4 houses, she'll plot out exactly how to get there in the exact timeline. So you'll have it in front of you and you'll know exactly what to do to get there.
Yeah, and I just want to tell everybody out there, the fellow that emailed us, Kaladi, on Friday, the 10 townhomes, he was thinking he might go buy a half duplex suited, and a half duplex suited anywhere in the city right now is 600,000. But if he did that, it would ruin his chance on putting 5% down on another property. So we actually said, Kaladi, let's delay the gratification. I mean, he's a single guy, right? He doesn't need a home like that. I mean, it would be suited property with the basement suite downstairs. So it's still kind of like a bachelor thing going on. But anyway, we actually said, no, let's just upgrade. We bought him a place in Copperfield. Is it Copperfield? New Brighton.
Right.
For 310,000 2 years ago, or less than 2 years ago. It's now worth 420,000. So he has a massive equity, 100 grand of equity that we've made him. He was renting in a building just behind us. We would have to go pick this guy up at Canada Place. Canada, I would not rent there. I don't know how people rent there. And if anyone's renting there, don't yell at me. I get in trouble all the time. But we would go pick him up there, drive him out, and we put him in this townhouse. We said, no, you're going to make money. He's made 100 grand in just little less than just over a year. And now we're looking at buying a townhouse in Northern Bay for 420. Okay, and putting 5% down again, which he'll move into. And that property, because of the hospital and everything that's going on in Seaton, will go up another $100,000. So we're going to make this kid $200,000. By the time now, after that, he's then Tim going to buy a half duplex, and then he's not even done getting his dream home after that.
And then it's his dream home after that. He will have 4 properties, and the average price of those properties will be probably $500,000. So he'll have over $2 million worth of real estate in less than 5 years. And he's done.
Yeah, he's done.
Yeah.
And you know what? Here's a good example of what we put our clients through. And we're not afraid to say, hey, no, you're not doing that. This is what you should do and why. Okay, so that is with Danielle. Take a photo of that screen and give her a buzz, send her an email, get started on your financing so you can get in on this crazy market.